Have you ever thought about your retirement while in your 20s? Now, I know it seems a tad premature, but there's wisdom in this madness. You see, planning for retirement at this stage can set you up for a comfortable future. You reap the benefits of compound interest, giving your money more time to grow. And let's debunk a common misconception. Retirement planning isn't just for the well-heeled, it's for everyone, regardless of your income bracket. It might seem like a distant future, but the earlier you start, the better off you'll be. So, what is retirement planning? Well, it's the process of setting financial goals for your post-work years and making strategic decisions to achieve them. It's about more than just saving money, though that's certainly a key part. Retirement planning is a three-legged stool, with savings, investments, and pensions forming the core. Savings are the funds you set aside from your income, whether in a bank account, a retirement account, or under the mattress. Investments, on the other hand, are your tickets to growth. These can be stocks, bonds, real estate, or even a small business. Then there's the third leg, pensions. This is the money you'll receive regularly in retirement, often from your employer or the government. It's like a paycheck, but for not working. Each of these aspects is important, and they all work together to form a solid retirement plan. Remember, retirement planning is about setting yourself up for a comfortable future. Step 1 in retirement planning is assessing your financial situation. It's like embarking on a journey where your financial status is the starting point on your map. Understanding where you are now will guide what steps you need to take to reach your destination, a comfortable retirement. To begin, let's talk about net worth. This is the total sum of your assets minus any liabilities you have. It can be a sobering reality check, but it's an essential one. Knowing your net worth gives you a clear picture of your financial health. Next, creating a budget is an invaluable tool in your financial arsenal. By tracking your income and expenses, you're able to see where your money is going, and more importantly, where it can better serve you. You might discover you're spending too much on takeaways or not saving enough. In summary, understanding your current financial situation is like having a compass in your hand. Knowing where you stand financially is the foundation of your retirement plan. Once you've assessed your financial situation, it's time to set your retirement goals. This step is about visualizing the lifestyle you want in your golden years. Do you see yourself traveling the world? Or perhaps spending quality time with your grandchildren in a cozy country cottage? Whatever your vision, it's crucial to set realistic retirement goals. To calculate how much money you'll need for retirement, consider your desired annual income. Then multiply it by the number of years you expect to be retired. But wait, there's more to it. You also need to factor in inflation and other variables such as healthcare costs. Remember, the value of money diminishes over time, and the cost of living is likely to increase in the future. So take your time to crunch these numbers and don't forget to revisit and adjust them periodically. Your retirement goals are not set in stone. They will guide your saving and investment decisions. Your retirement goals will guide your saving and investment decisions. With your goals in place, it's time to start saving and investing. This step is crucial to growing your wealth and setting yourself up for a comfortable future. There are several avenues to explore when it comes to saving and investing for retirement. One such avenue is an employer-sponsored retirement plan, often known as a 401k or a 403b. These plans are typically automatic, pulling a designated amount from your paycheck each period. Some employers even match a portion of your contributions, which is essentially free money towards your retirement. Then we have individual retirement accounts or IRAs. These come in two flavors, traditional and Roth. A traditional IRA offers tax deductions on contributions today, with taxes paid upon withdrawal. A Roth IRA, on the other hand, has you pay taxes on contributions today, but withdrawals in retirement are tax-free. Apart from these, you can also consider other investment options like stocks, bonds, mutual funds, or real estate. These can provide additional income streams and diversify your portfolio. But the real magic ingredient in this mix is compound interest. Put simply, compound interest is earning interest on your interest. Over time, this can lead to exponential growth of your savings. The key here is time. The sooner you start, the more you will accumulate. Remember, every bit of saving and investing counts. It's not about making huge leaps, but taking consistent and deliberate steps. The sooner you start saving and investing, the more time your money has to grow. To recap, retirement planning in your 20s involves assessing your financial situation, setting retirement goals, and starting to save and invest. Let's take a quick walk down memory lane. We started our journey by confronting the question of retirement in your 20s. It might seem too soon to some, but as we've discovered, it's never too early to start. The power of compounding, the potential for growth, and the peace of mind it brings all make it a worthwhile endeavor. We then dove into the basics of retirement planning. We realized that it isn't just about stashing away money blindly, but rather about understanding the financial landscape, knowing the various retirement savings options, and making informed decisions. It's about navigating the terrain with a map and a compass, not just wandering aimlessly. Assessing your financial situation was our next stop. We stressed the importance of taking a good, hard look at your income, expenses, and overall financial health. It's about knowing where you stand today to plot a course for where you want to be tomorrow. Setting retirement goals came next. We learned that having a clear destination in mind makes the journey easier. Whether it's a beach house in the Caribbean, a cottage in the countryside, or simply a comfortable, worry-free life, having a goal gives you something tangible to work towards. Our final leg of the journey was about saving and investing. We emphasized that every penny saved today is a step towards a comfortable future. We also touched upon the importance of investing, not just saving, to grow your wealth and beat inflation. And now, here we are at the end of our journey. But remember, this is just the beginning of yours. Starting early and being consistent is key. It's not about making huge sacrifices, but about making smart decisions and letting time do the heavy lifting. Remember, your future self will thank you for the steps you take today. Start planning for your retirement now.